Education and staffing group Advtech has reported a 7% rise in revenue for the 6 months to June, but operating profit, net profit and headline earnings a share all fell back slightly as costs rose and the group invested in future growth. Joining me with more on the numbers and prospects is Group CEO Frank Thompson. Frank, thanks very much for coming in today.
Hi, Steve.
Frank, you say in the commentary, challenging operating environment against the backdrop of continuing recession and job losses. And of course, your education, your staffing, where do you feel it the most during a downturn?
Well, I guess the first response to that is to explain that the education business is the big part of our business, 86% or so. So clearly, if we feel it there, we're going to feel it quite significantly in the numbers. But in fact, it affected both sides of our business in different ways.
With education, it's not really discretionary spending. Do you get less enrollments during a recession? Do people drop out of private schooling or private colleges during tough times?
The answer to that would be as little as possible. And the reality is that the main element of full-time students who are pursuing their extensive education with us have not dropped out. We continue to have enrollment growth, we continue to have waiting lists, we continue to see a rising demand for that form of education. But each of our brands also has some more peripheral, marginal business opportunities, particularly on the tertiary side. Someone who might be pursuing a short learning program to upskill themselves with a view to a future promotional opportunity, someone who might be looking to upgrade existing skills. And some of those people are forced by the recession, perhaps by a job loss or something. There have been 1 million jobs lost in the last year or so, to postpone that investment in their own future and their own education.
So we're talking about adult education that's mostly affected there.
That is particularly one of the areas that's affected, and also to some extent the full-time students where the parent who might be paying for that education has had the misfortune to lose a job.
How about debtors or arrears? Do you have non-payments by some of your students during a period like this?
We do experience that, but we've now had a good 18 months or so to prepare, and I'm pleased to be able to tell you that our debtors book remains exactly the same in rand terms as it was a year ago, in spite of the 7% growth in revenue, which would indicate we've been able to succeed in keeping a pretty good handle on our debtors and collections.
Now you mentioned the 7% improvements in revenue, your operating profit down 3%, net profit down 7%. You did have a rise in some costs on the cost front, so you had rental costs up 18%, depreciation and amortization up 19%. You also mentioned that at this stage you continue to invest in future growth. So is it a case of really investing in tomorrow and when we do see that recovery?
Yeah, it's keeping the faith, basically. We have had for quite a number of years now a strategy of investing in creating new places in education. That requires new infrastructure, which we either purchase ourselves or rent and then improve the rented premises, all of which comes through in costs in the income statement in terms of depreciation and amortization. And we've also continued to invest in high quality, highly skilled staff and to grow the numbers to be able to service those extra places. The revenue increment that we need to match that just didn't quite keep pace in this period, which explains the glitch in operating profit.
Okay, net interest received down 27%, and of course we know what's happened to interest rates over the past year and a half. Why do you sit with so much cash?
Well, at this time of the year, the seasonality of our business is that we would have significant amounts of cash, which we then use to fund the business through the second half. But education in particular is a business where the fees are collected in advance, either annually or termly or monthly, and the expenses are incurred gradually throughout the year. So that's an effect of balancing the cash.
Yes. Now, talk to us a bit perhaps about resourcing, the resources side of the business. Are people starting to employ again? Are you placing people temporary, full-time? What's it looking like at this stage?
Temporary staffing is not a significant part of our business at all. And our permanent staffing business, which is then 90+% of what we do, has always been very focused on so-called high-demand, scarce skills in IT, finance, and engineering. And what we found is that in the recession, with the effect of the job losses we've already discussed, that people have been more careful about making hires, extended the time period that it takes to make decisions, being more careful about job security. But what we're seeing now is that that is changing. People are getting more confident. Perhaps businesses are finding that skills they've somehow managed to do without for a short amount of time, they no longer can, and they're making the hires and they're getting on with business. and we're seeing a more positive employment climate in those high demand, scarce skills.
Well, as we go into the second half of the year, of course, we are a couple of months in already. What's the prospects looking like for your full year, and when would you expect to see a normalization of conditions for the company?
Well, I think it's been argued that things are going to remain tough for quite a period, and perhaps that the conditions we experienced at the end of 2007, early 2008 were the anomaly rather than the norm. But we feel that the positioning of our group in key national priority areas of education and jobs means that as long as we keep doing things well, keep doing them right, keep doing them with very high quality and good success for our graduates, the market will take care of itself. And that is the long-term confidence with which we continue to invest in the market and believe in our business.
And of course, we do have that public sector strike at the moment, so public education is being disrupted. Do you think that could send more pupils your way?
Well, our view of the strike as a whole is that it's just not a good thing at all. And while there may or may not be short-term gains to be gained from this, we're not happy about it. We don't believe it's a good thing, and we would certainly hope that in that area of South African life there will be a return to norm and the development of our young people. That's our capital, and if we don't look after it, there's going to be real problems.
Frank, thanks very much for coming in today.